Hello everybody. In the current affairs this week, the week ended 6th of October 2024. Happy Navratri to all. In fact, fireworks started quite early. We see fireworks in the times of Diwali, but this week we saw fireworks in the skies of Israel, and that was very unfortunate. There is a very serious crisis which is emerging in the Middle East, and there is a serious state of war between Iran and Israel. Iran is fighting with Israel on several fronts, and Israel is responding to Iran on several fronts as well. The fallout of this war could be quite serious. This is not a war which is going to end so very easily. Both sides are very steadfast and strong-headed insofar as their agendas are concerned. What might eventually happen, and which could be very unfortunate, is that it could lead to a proxy war between the superpowers. And if the balanced Muslim world beyond Iran starts getting involved, then it could be even serious. This has already impacted the trade in the region and the trade which is passing through this region. Crude oil prices in just 1 week have escalated by 9%. This can lead to inflation across the globe. Interest rates, which were expected to be now on the cutting side, where there would be a cut on the benchmark interest rates by the central banks, might be halted on account of the fact that with the rising crude prices, there could be an advent of inflation across the globe, and the central banks would not be able to cut the interest rates. All this is definitely going to impact the Indian economy at the macro level. The micro part of the Indian economy, the corporate side, is quite positive, but these macro level headwinds could definitely impact the Indian economy. The another thing which was happening insofar as the impact on the Indian stock market, much beyond this crisis in the Middle East, was very strong selling, unprecedented selling by foreign institutional investors in the Indian market. The trend with the FIIs was sell India and buy China. The buying in China on the stock market was propelled by the fact that there are so many funds of many foreign institutional investors which are momentum driven. And China today is a momentum market. So many of the FIIs want to take advantage of this momentum. The valuations in the Chinese market are quite attractive, especially on the figurative terms. Maybe there are fundamental problems on the geopolitical side and the crisis of confidence which an investor would have dealing with China. But the fact remains that on paper, in the figures, the Chinese market are attractively priced. The reforms announced by the Chinese government and the central bank are also one of the factors which will lead to this momentum in the Chinese economy. All these led to a lot of buying and movement of funds from India and towards China. This impacted the Indian stock market, and the benchmark Nifty 50 was down by 4.5%, Nifty mid cap was down around 2%, and Nifty small cap was also down accordingly. The FIIs were sellers to the extent of 40,000 crores in just 1 week, and on one day they sold record Indian equities to the extent of 15,000 crores. But the DIIs lent support to the Indian market, and they were buyers to the extent of 33,000 crores. The major sectors which got impacted were Nifty Auto, which was down by more than 6%, Nifty Realty, which was down by more than 7%, but Nifty Metal was quite unchanged even in the falling market. Gold, silver, Nasdaq and S&P all were by and large unchanged. But when we look at the 1-year return, the 1-year return on gold is 43%, and last 1-year return on silver is 52%. Nasdaq in last 1 year has given a return of 37%, and S&P 500 has given a return of 34%. When you compare this with Nifty 50, the Nifty 50 appreciation in last 1 year was 28.7%. So all these four benchmarks of US and basically precious metals like gold and silver, they have quite outperformed the Indian equities, which are one of the best performing equity markets in the whole world. So Indian equities have done well, but metals, especially precious metals, and the US markets have also done quite well in the last 1 year. This is all for this week. Thank you.